Is the bloodbath over for Matic? Is a buy to dip opportunity finally here? Let's talk about this major correction that we just had. Looking at the price action right now, it's still in bullish territory. As long as we do hold that support above this 200-day EMA at about 95 cents, we can expect the price to make a higher low as long as we stay within this range. And compared to what we just had in July, this correction that we just got, this could be another great entry point for the next major run up, pushing towards all-time highs. Let's get it. And we are live. Welcome here to the channel. I'm your host, John, here again. @RealJohnDoe is my Twitter. Let's get into today's video. But before we do that, make sure you do hit that thumbs up button, like this video. Let me have your attention because I'm going to give you an updated analysis for Matic right now, since we are seeing quite a bit of shift in the price action. So let's look at the price levels and see if there's possibly another chance for another major run up as we get into the end of 2021. And here we go. Right before we get started, I need you guys to help me out with something. If you're watching this video right now and you're not subscribed, just hit that subscribe button. We're just at 22.9K subscribers, almost at 23,000. So I'd really appreciate it if you could do that. Just takes 2 seconds and we're about to reach that milestone for the channel. Big round of applause for all of you who are already subscribed. And just like I say every time, come to our channel and we will continue putting out content, giving you guys analysis on the top cryptos. Same thing here for my Twitter. You can't find it. Just search @RealJohnDoe. Follow me on there if you want to be even more in tune with what's happening. First thing at Matic right now, let's have a look how it's been doing. Here on CoinMarketCap, Matic is all the way down here at about number 21, and it has not been a good day and week for Matic. As you can see, it has not been performing very well. It is down about 11-12% in the past 7 days. And I'm going to give you what my price targets are towards the upside with this possible buy to dip opportunity we have right now. But first, let me give you some important price levels to keep an eye on. So for Matic, it had a major correction and we need to see how price handles support as we look for entry points or buy to dip opportunities for a reversal. So for support right now, the first level I have is this current range we're in. Price has been holding off for about a day or so. We could get a minor bounce, but for now, I'm looking at it as the current support. If it breaks though, we got $1.10, which is September lows. And then the last level, 95 cents, which is very important. We need that to hold so we do get a higher low and the bullish trend is not broken. Now for things on the upside, if they do bounce from these current ranges, I got $1.44 as that next resistance. That's the 21-day EMA. And then I got $1.60 for us to approach, which was the highs from August. And then after that, I got $1.80, and that is so far the highs from September. So now that you know the price levels to keep an eye on, let's talk about what's been happening recently with this price action. First, I have here the 4-hour chart for Matic. This is more of a short-term outlook. In the coming days, what can we expect? If you look right now, the price is trading below the 200 period moving average and the 21 and the 50, all on that 4-hour chart, which is not a good sign right now. We could get a bounce, but if we do get a bounce, we need that to be strong with a nice V-shaped recovery, pushing us right back up towards 150 to 160. And that would be ideal within the coming days. But if we do not get that to happen, then in the short term, in the coming days, I'm expecting things to continue to be bearish or sideways as we get towards the end of the week. And then we can start off a fresh new weekly candle, pushing up towards the highs. But I do not see, or I hope Matic does not head down towards the lows from September that we do have at about $1.10. So if we do stay above $1.10, but stay below $1.40, then that is ideal for this next few days or so. As things got pretty volatile with this major correction that we just had here from the highs of September, that did bring us down currently about 30% or so. So in these days we are in right now, this can change pretty quick, but this is a 4-hour chart. Things have been pretty choppy, as you can see here, sideways. And as long as we do get the lows from September to hold, then I am looking at this range as a buy to dip opportunity, which would be the push that we need for a crossover back above that 140 to 150 level, and then go start testing some of the resistance and push towards a new high as we get into the end of September or even early October. So this is a short term, what I'm expecting here on this 4-hour chart. Now let's look at the daily. Things could be a little bit different on here. Oh yeah, and one more thing to mention, look at this 4-hour RSI. This is the lowest level we've had since here at the end of August, where we also tested that 200 period moving average. The only thing now, we do have a lower low, which is not very good, but the RSI is holding off, staying above that oversold 30 range. So we could get a little bit of RSI trending below and finally bottoming and flipping the 50. And that would line up with price moving sideways in this range and then flipping back the previous support levels and heading up to $1.60 and then even pushing to $1.80. So like I was saying, let me get back here to the daily chart. Things could look a little bit different on here. It is still in bullish territory if you look right now for Matic, Polygon. This was the bullish crossover point right here that I had marked out. And if you look at this current price level that we're at right now, that does line up with that bullish crossover range. So we could just be testing that range once again. And then, like I said, some sideways, as long as we hold $1.10, we do have some chop here, sideways price action, and then push towards 160 to 180. That also lines up with a pretty similar analysis on the daily chart with the 4 hour. One thing I don't like though here on the daily is this daily RSI. It did make a lower low. It is now below that 50 level, which is not a good way to trend. If you look down here, what we did have back in June, same thing. The RSI made a lower low and continued trending downwards as price found support on that 200-day moving average, and the RSI also got down towards 30. So that is also something we need to look out for because, like I said, in a 4 hour, as long as this 110 level holds, things do look good. But let's say they don't. The next range we got is right at this 200-day moving average at about 95 cents. And that would line up with the RSI heading back towards that 30 range in the oversold. And that will be the last line of defense for the bulls, where you would look for quite a bit of buyers to come in. And that is also a good opportunity because if you look here, when we had these lows back in July, they did line up with that 200-day moving average and a bounce. So you also got to be open to, if this range does not hold, we break $1.10, head down towards 95 cents. That could be where we see that bounce, pushing us back up towards the highs. And that still stays within this bullish trend line from the lows in July. So right now, what am I expecting in this current range? Some sideways price action and a test of the lows and some buyers to come in. From this level, I am looking for a bounce to push us up towards 160 to 180, but my invalidation level is right here at about $1.10. So to the upside, like I just mentioned, we got that 160 level, 180. And then if we do flip those into support and breach past, then the next level I'm looking at is up towards this all-time high range at about $2.60. Because as you can see, when we did have that major run, there was not too much support and resistance up towards that level. So if we do breach past these resistance levels, we may see a daily candle, a major daily candle for Matic to push up towards the all-time high range, up towards that $2.60 level. But on the bearish side, keep alert. Let me show you what I'm looking at on the downside. I do have $1.10 as a price level we need to hold really badly for the bulls. And then the next level is down here at about 95 cents, which is a 200-day moving average. But if things do get ugly, we do not want it to head back down towards the lows from July. That is about 60 cents, 75 cents. That would be pretty bad for Matic, because if we do head down that level, then we possibly would get something like a bounce from that range, testing the 200-day moving average resistance, a rejection from there, and lower lows will continue, indicating a downtrend to continue for Matic. But as we get closer and closer to these levels that I mentioned, I will keep you guys updated in more and more analysis. So make sure you are staying tuned with the channel. I hope you enjoyed this analysis on Matic. If you did, make sure you let me know in the comments below. Leave your feedback on the video. Let me know what you would like to see next. And as well, before we take off, make sure you do hit that thumbs up button. It really helps us out in the YouTube algorithm. Now we'll get back to you with another video. Thanks for watching all the way through to the end, and I'll see you next time. Good luck with your trades. It's John here with Currency.com. For more trading videos just like this, please subscribe to our channel.